If the words cash flow, operating expenses, budget, and taxes leaves you feeling a little bit queasy, then today's episode is going to change that for you. I'm joined today by my special guest, John Briggs. He is the author of Profit First For Microgyms and has worked with thousands of studio owners, helping them manage their cash flow. And by that, I mean increase their cash flow using his method, which he's actually going to share with us today, alongside some tax tips, the essential 7 bank accounts you need, and where you should start if you want to actually take control of your business finances. Well, hi there, I'm Seran Glanfield. I'm a business and marketing strategist just for boutique fitness studio owners like you. If you're ready to be inspired and make a bigger impact, you're in the right place. All you need are a few key strategies, the right mindset, and some support along the way. Join me as I share the real-life insights that will help you grow a sustainable and profitable studio. This is the Pilates Business Podcast. Welcome back to the Pilates Business Podcast. I'm Seran, and I am so happy that you are here with me today. I have got a very special guest with me today. John Briggs is the founder of Incite Tax, and he's also the author of Profit First For Microgyms. And he, as a fellow past gym owner, just knows all too well about all of the barriers and the unknowns and the ups and the downs that you are dealing with every single day. And he is a man on a mission. He wants to give you guys, all boutique fitness studio entrepreneurs, a solid work-life balance, and give you the tools and the insights and the understanding to help you to really manage your cash, to understand your taxes, and to really have the confidence that you might be looking for in your choices to become financially resilient. So we've got a lot to talk about today. Welcome, John.
Thanks for having me, Seran.
Yeah, I'm so glad you're here. So you wrote a book about Profit First for Microgyms. And I know that some of the folks listening might be familiar with the Profit First, but a method which was written by Michael Michalowicz, but you have taken it and applied it to the fitness world. So why don't you tell us a little about how you came to be in the place where you're at today?
Okay. Well, so I have an accounting firm, CPA firm, currently 35 team members. And I, years ago, had read a book called The Pumpkin Plan by Mike Michalowicz, same author of Profit First, which is actually how I eventually found Profit First, actually. And since then, we can get into the history, but Mike has become a dear friend of mine. And the Pumpkin Plan talks about how you identify a niche, which, if you're listening to this and you haven't read it, it is worth listening to, because you could potentially find a way to hone in your marketing by following some of his guidance in there. But anyways, he walks you through steps. How do you find a niche? And we did the steps and ultimately came across, oh my goodness, we have a lot of gym owners who are clients and we love working with them. And they know that they don't know what we're teaching. So it makes us feel better when we get to help them. And then to add in a little bit of a downer, but as far as motivation with working with fitness people, I'm a firm believer in fitness. And my dad ended up passing away when I was younger because he didn't believe in it. And so some of the symptoms that he had that caused him to die early was because he didn't have a regular fitness plan. And so I think about what gym owners do. I literally believe they save lives. And so we need them to stay in business to save lives.
Yes.
Right?
Yes.
Too many of them, especially when they come to us, we can see they're living paycheck to paycheck at best.
Mm-hmm.
They're falling on the sword. They're paying everyone except themselves. Mm-hmm. And they haven't seen their family in a long time. They're working the 12 to 16 hour, 18 hour days, and that doesn't have to be with even some simple cash flow management stuff, which I'm happy to share with you guys here today. There's some things that allow them to be at home for dinner time where they have some stuff, some cash reserved instead of that fear and anxiety of living paycheck to paycheck. So That's kind of where I'm coming at from a CPA standpoint of how we want to serve our fitness professionals, because the world's literally a better place because they are in business.
Absolutely. Couldn't agree with you more. So let's dive in and talk a little bit about, so we talk a lot about revenue, we talk a lot about profit, but people don't tend to talk as much about cash flow, but it's probably more important or the number one thing we should be thinking about. So why don't you share a little bit more about how you think about managing finances in the studio?
Sure. I mean, cash flow is the lifeblood of your business. And we have to understand that the profit and loss statement is designed mainly to help you file your taxes and get some good information, but not as good of information if you're just looking at cash flow. Now, I don't want to discount it. Eventually, you want to look at all the numbers, but gosh, you do not want to ignore cash flow. So with Profit First, whether you're familiar with the original book or not, kind of starts off talking about Parkinson's law. So imagine I'll state the law first, and I'll share a little bit of this story. The law says the demand for something expands to match the supply, which is a little bit different because a lot of times we grow up hearing about supply demand theory. It's almost reverse. The demand for something expands to match the supply. So think about your bank account. Most gym owners, fitness studios, boutique studios, they have one business bank account. So yeah, that's a giant pile of supply. So the demand to spend that cash in your bank account will continue to increase until you no longer have cash available to spend. It's human behavior. And you know what? We should not try to fight that. We know that that's going to happen. So what we do with the Profit First methodology, which is managing cash, we're going to give ourselves a false sense of reality that we have less money to spend than we really do. Because the truth is, when you get a deposit right now, say it's for $100, that $100 isn't yours. You might owe the landlord. You have coaches you're going to owe. The government, they're going to want to take their piece of it. I won't go down that rabbit hole.
Right.
And so Profit First says, well, we know certain important categories that are going to happen. So let's go ahead, as the money comes in, let's set aside a percentage of it into these different buckets. The Profit First book calls it smaller plates, which if you're, one of the reasons I love Profit First is because it relates so much to fitness. Over the course of 30 years since the 70s, the average plate size has increased from 9 inches to 12 inches. And we're all taught, finish what's on your plate. And so a simple technique that many of you have probably used with your clients is just ask them to use a smaller plate. They're still going to feel full after eating the smaller plate, but it's less calories. Same idea with money. Let's get everything out of the giant big plate of your operating expense account and let's use some smaller plates. So we have what we recommend, the Essential 7 bank accounts. This is a little bit different than the original. One of the reasons Mike let me write the book is because I told him, I said, man, every time I'm working with a gym owner on managing their cash with the system, we're tweaking it quite a bit because the way we tweak it makes more sense for them. So here are the Essential 7. You have one account for income, and the sole purpose of that account is to actually just receive your deposits, your customer deposits. That's it. And then we have team member expense. Whether you pay that team W-2, 1099, per hour salary, it's not relevant to the way we're managing the cash. Whatever the cost is for your team, that's what the team member category is for. And then we have owner's pay. Very important that the owner, I know this is hard to hear, but you're the most important team member in your company. And it's not, we're respectful to our team, but you literally are the most important person. So if you had a company, you're going to make sure the most important person gets paid first, right? Yes, that's you. You got to take a salary I'm not talking like tax definition of salary. You have to take home a consistent amount of cash. That's what the owner pay account is for. The fourth one is profit. So a lot of owners also overlook this. Guess what? You're the one taking on a risk that your other team isn't. That risk deserves a reward. Wall Street calls it ROI, or return on investment. So some people buy stocks that specifically give out dividends. That's what we're doing here. You have stock in your company. That's the equity that you own. And you should be giving yourself a portion of the profits as addition to the money you're taking home every month to live off of. That's what the profit account is for. And then we have tax, unfortunately, or fortunately, however you look at it. Look, I feel blessed to live in America. I love the freedoms that we enjoy, and I understand that comes with a cost. I also don't believe the government's super efficient at spending our money. And I believe the economy is stronger if the business owner, if you keep your money longer. So we have to pay tax, because the last thing you want is to come to April 15th and they say, hey, you owe 5,000, 10,000. Like, what? So we set it aside throughout the year so it's less painful. And then it's there when you need it. And then the sixth account you already have, that's your operating expense account. That's where you're going to pay all your bills out of. And the seventh account is equipment. You have wear and tear on your equipment, so you don't actually see that cost, but you want to have the money set aside so that in the event that a piece of equipment breaks down and you have to replace it, you got the cash already there. So we work with a lot of gyms that'll have like rowers or bikes, and those aren't small purchases for them. And so if a rower breaks down, like, where am I going to come up with $1,500 or $2,000 to buy the new one? And so they're without for a length of time, or they never recover and aren't able to replace it.
Which is directly impactful on the amount of money you can make per class. Right.
So now do you have to cap the size of your class? Mm-hmm. I mean, So having that money set aside specifically for equipment. And what we have found, a lot of gym owners and fitness studio professionals will take that account. And then if they have other opportunities, like maybe moving into a second location, they have that cash available and they'll pull some out of the equipment account to maybe pay for the down payment on a building, or the first month lease or something like that, or fund new equipment for the new location. So we've seen a lot of creative uses with people using the equipment account. So those are what we call the essential 7 accounts. I'll pause there because it's a lot.
Yes, I have got some questions. So the just total clarification, the idea is that you already have that income account. That's probably what everyone already has that right now. And basically all of your expenses and all of your income is going into that one pot and coming out of that one pot. And we're probably just going to use it all up because it's just the one pot. And if we are able to separate out into different pots, then essentially what we're doing is budgeting, setting a budget for these different parts or setting aside money for potential future expenses, taxes and equipment costs, etc. So, I think it's really interesting how you differentiate between owner pay and profit and how you describe that. And I love that that's how you describe it, because it's so important, the difference between the two, because you need to pull a regular kind of fixed amount from your business to live off of. You can't just see what's in the bank account at the end of the month and sort of think, oh, I'll take some of that. You have to be thoughtful about what that looks like. And that means, though, all of this means that you kind of need to have a handle on what those numbers are roughly, what your expenses are, what they look like each month. So you can allocate, I'm assuming monthly is when you kind of do the draws out. And how does that all work?
Yeah. So we call them rhythm days, and we actually recommend either weekly or twice a month. And I know if you aren't doing this now, that can sound overwhelming, because some fitness professionals are like, I do my numbers like once a year for taxes. You want me to do it every week? I promise I'm not going to sugarcoat it. It will take a little bit to develop the habit, but just like you're asking your clients to develop the habit of coming to your studios and exercising regularly, we're trying to implement the same concepts from a financial regime standpoint. Schedule it in, honor the appointment, and as you get into it, your 10 minutes if you're doing it every week, it's 10 minutes of work. That's it. And you then don't have to worry about all the other times of the month where you're like, oh, I have pills. Am I going to be able to afford that? Like, no, because you already sat down and you allocated money and you took 10 minutes. You saw the bills that are currently due and when they're going to be due, and you're transferred money into the different buckets. 50% of our clients do it weekly. 50% do it on the 10th and the 25th. You just want to make sure they're 15 days apart-ish if you're doing it twice a month. But that way you don't feel the big hit. I mean, if I'm setting aside $200 a week, cool, I got 10 grand saved up by the end of the year in that account. And I can shoulder the pain of $200. If I needed to come up with 10 grand at once, that hurts a little bit more.
Yeah, absolutely. No, it makes so much sense. And the activity of doing it weekly just also makes you more aware of what your expenses are, and you're more on top of it. And if, as we know, the more focused you are on something, then those things tend to go better. They tend to go in the right direction.
And that's really the magic of the system. I mean, look, this is simple. Okay. That's why I love it. Anyone can wrap their head around this. Now, we all know that simple isn't easy. Not always. Those aren't synonymous words. But if you take the time and you're doing this, you could get to the point where as you're allocating money, you're like, I don't have enough in the account to cover my current expenses. That's actually good, because now the business is trying to tell you as the owner, your business can't afford all your expenses. So it's a natural way to make sure we're not adding unnecessary expenses to our business, because in the good times, I mean, I've seen this so many times. As income increases, expenses will increase at the same pace, if not faster, than the income itself. When you're using this Profit First system, that doesn't happen, because you're using percentages and you're always going to stay within that percentage. So yeah, income increases, but it's the same percentage. So the dollar amount's a little bit higher, but it's the same percentage. And that way you can run a financially fit studio without, it happens naturally instead of you having to go in and hack out stuff and, get in that scenario where now how do I get a loan? Because I can't pay all my expenses.
Yeah. So you're absolutely right. I see the expectation often is that as I grow my business and have more people and my revenue increases, that my profit will just automatically grow. And that is very often not the case, unless you are, like you say, you're very on top of your numbers and making sure that you're tracking them from a percentage perspective versus a dollar amount. And I think as revenue increases, I think if you're only looking at that top line number as an indicator of the health of your business, it's also extremely misleading.
Yeah, exactly. Especially if you look at like team member costs, like, okay, if I have group classes as part of my revenue stream and I have coaches coaching that, which you should, right? You don't want to coach every class yourself. I don't get the full revenue. I've already committed to paying my coaches. I mean, the construction industry is more susceptible to this, but you have someone who's like, oh man, I made $2 million. I just sold a $2 million home. Yeah, but you spent 1.8 just in materials. So you actually made $200,000, not $2 million. Don't spend don't spend it like you made $2 million. Okay.
Right.
That's why we like the system, because it tells us this is how much real revenue you actually have.
Right. And then when you look at your bank account, or when you look at you can see exactly how much is in that profit account, right? And that's actual real true profit. Whereas if you have the commingled pots, what that number is, it's really very meaningless, because you haven't paid your taxes yet, and because maybe you haven't paid everybody you need to pay this month yet, and maybe you're not pulling anything out of there, and maybe you've got other expenses that are coming up, and all of a sudden that number is actually not what it really is. So yeah, this makes a lot of sense. Very sensible. So you mentioned percentages. How do we know what to put in which bucket? Like, is there guidelines around that?
Yes, there is. So we would recommend people do a cash flow analysis, and it's in my book. Mike did his study on a bunch of different businesses and different industries. And I said, for mine, I just want to look at financially fit gyms, because I don't know very many single locations, because that's what we look at with Profit First, manage cash per location. I don't know very many single locations that make more than $1 million. There's a handful that I've met over the years. But Mike's top tier goes up to like 10 million, which can get confusing for gym owners and sometimes a little depressing. So we looked at financially fit gyms. There's 3 tiers. And based on that tier where you fall in, it gives you suggested percentages. Now, that being said, those suggested percentages are what we call TAPs, target allocation percentages. It's what we're targeting to. It's like, if I want to lose 30 pounds, the target is 30 pounds. But my current goal is 2 pounds a week. And so rarely is a gym owner able to go and look at the suggested percentages and adopt them immediately. Usually you have to work into it because without thinking about it, look, it's natural. Don't beat yourself up over it, but your operating expenses are going to be a lot higher than they should be. You have unnecessary expenses that are not being productive right now, but you just because you haven't looked at it. That's fine. We look at it now and it'll be great going forward. So you come up with the current allocation percentages with the target as the goal. And once a quarter, you kind of switch them. I'll say this, if any of your audience wants that, I can email them the table. I mean, I think buying the book is a great $20 investment. But if they just want the table, they can email me, john@incitetax.com, and we will email them back the table that they can use. We'll even send them a link. We call it a 5-day challenge. It breaks up doing that analysis into small 10-minute or less chunks over 5 days. Because you are going to have to get your bank statements out and you're going to have to look at some numbers and you're going to plug them in. So we've kind of simplified it as much as we can so that by the end of the 5 days, you can see what your analysis looks like and what percentages you have and what maybe we're suggesting.
Fantastic. Yeah, I'm going to pop in the show notes all of the links to everywhere so that folks can get in touch and ask you. But yeah, so you mentioned about like cash flow and where there is opportunity for where people leave they're perhaps are leaving money on the table. What do you tend to see most often is, because you work with a lot of studios and purely on the finance side and purely at looking their accounts. So, you have seen it all, I'm sure. Where do you often see people making mistakes that perhaps they can easily avoid?
Yeah, you would think after, we've probably over the years worked with collectively thousands plus that there would be, this is the frequently common scenarios. They're all over the place. There's not a single solution or oh, you know what, you're likely doing this. A lot of it's subscriptions. People have multiple crossover subscriptions. Maybe that's music licensing or things like that. A lot of times when we ask them to look at their monthly recurring expenses and other things, we get 2 comments. One is, I thought I canceled that, but they didn't, so they're still paying for it. And 2, I have no idea what that is. So we actually recommend, I have an entire chapter in the book that goes over how do you analyze the expenses. There's 9 questions we recommend. And if you go through all 9 questions, you will know by the end of the 9th question, is this expense actually serving your business? So to simplify it, think about it this way. Really, your job as a business owner, as a shareholder of your business, is to grow it. So is the expense contributing to adding more clients, or is it adding to retaining current clients? If it doesn't fit into those 2 simple definitions, there's a chance you probably don't need to spend money on it.
Right. Yep. And it requires you doing that sort of analysis and being as aware as you need to be to implement this effectively. It requires you to really develop that skill set of really understanding the numbers, which you can't really hide from when you have a business.
You can't hide from it. And even if you try to hide from it, it will find you. And what happens is usually those gym owners, when it finds you, that's what we call burnout. And that's what we're trying to avoid. We started talking about how important you are to your local community. You're literally saving the lives of your clients. And if you don't pay attention to this, when it catches up to you, you're likely going to have to shut your doors, or you're going to be so exhausted from the energy you've put in with nothing to show for it that you don't have the desire to keep the doors open. And so we want everyone to implement this as soon as they can so that they can choose to be in business as long as they want to be in business, not being forced to make a decision.
Yeah, absolutely. And, taxes are always a big thing that we often put off and don't think about and would like to not think about. So how should studio owners, boutique fitness studio owners, think about taxes and accounting for those in terms of their expenses and so on?
Yeah, so a couple quick tips. First one is, what is the entity structure you've chosen? What I'm referring to is, are you a sole proprietor? Are you a single member LLC? Are you an S corporation? Are you a C corporation? Those things. I obviously don't know your specific scenario, so I can only give you general advice as you're listening to this, but our experience has shown you want to have an S corporation somewhere in your tax structure. The S corporation allows you to save on some self-employment tax. It can become significant. For basically every $1,000 you earn, you save $100 just in self-employment tax. Now that's the payroll tax. It's the same words, or the two different words mean the same thing. Everybody pays the income tax, but if we can reduce the self-employment tax because it's in addition to the income tax, then we're winning. And the S corp is a great tool to do that. Again, you might have a specific different things, and if I knew your scenario, I might advise differently. But generically, 95% of fitness professionals should have an S corp somewhere. The next quick tip is how you look at expenses. So the tax code uses fun words that make no sense to any of us because they don't tell us what it means. They say, hey, for something to be a write-off, it has to be ordinary and necessary. Wow, that's great. I can argue it's ordinary and necessary all day long, and the IRS is coming back and say, no, that wasn't necessary. Okay, so can you give us more clarification, IRS? Oh yeah, sure. It needs to be helpful and appropriate. Okay, great. 2 more words that don't help us at all. So here's the way I explain the stupid language the IRS uses. If you're spending $1 and it's related to your business in any shape, form, or fashion that's related, and you can relate it to your business, then you should write it off and it should be a business expense, which means you pay for it out of your business account. I hope everyone listening here has at least a separate business bank account. Please do not use your personal account for your studio, for the love. You have to have at least a separate, but hopefully you're convinced you should use the Profit First way and have a few more accounts.
Yeah. That's very helpful. Really helpful. Fantastic. So why don't you tell us a little bit more about how people can learn more about you and what you do and how you help studio owners with their accounts, but also where they can get their hands on your book, which sounds amazing and very helpful.
Yeah. So, we're sold Amazon, I think Barnes & Noble, Target online. You can buy them there. Most people buy it on Amazon. You can go to our website, profitfirstformicrogyms.com, and you can learn a few more things. We have some DIY courses that people can use. Our tax firm is Incite Tax, and that's INCITE. Incite means to cause to action, because we don't want people just being lackadaisical about saving taxes. It does take effort. So incitetax.com. If you go to incitetax.com/wealth, we have a bunch of free resources there, one of which is the 9 questions that we recommend people use. Those are all easy ways for you guys to get some free access to some stuff. And then if you want to reach out to us, you can use the Contact Us page on the website.
Fantastic. I'm going to link to all of that in the show notes. It's been incredibly helpful. I think this is a topic that, like I said, a lot of studio owners tend to avoid, and it brings a lot of all the scaries out in everybody. And so when you get just a little bit more information and a bit more clarity and a bit more direction, it all just becomes a lot easier. And obviously that's a good thing for business owners. So it's been great.
Yeah. We almost 4 years ago, I bought a gym that I was going to because I could tell by the signs that they were going to go bankrupt. and that they definitely weren't profitable. And I really wanted to buy it specifically to understand our clients that we were working with, because I believe gym owners and fitness professionals are the world's superheroes because of the work that they do, saving lives, because that's what superheroes do. You look at all these things, they're just trying to save the world, right? You're saving the world one community at a time, and your business being that local community. We want everyone to be able to leave a lasting footprint, a legacy on that community. And in order to do that, they have to pay themselves. They have to be profitable. There's no way to stay in business if you're not profitable. And so I purposely took over gym ownership just so that I could understand. Because it's one thing to say, hey, group training, personal training, and nutrition are like a three-legged stool for a lot of gyms. It's another thing to then know now what that conversation looks like when you go to your coaches and say, hey, we need to add a revenue stream. And they might give you pushback because they don't understand business. They just think you're rolling in dough, and you're not. And so I talk about that a lot in my book. And really the main message of my book is that gym owners, you listening to me, you deserve to be profitable. I want you to accept that. So many people come into this from a charitable standpoint and they're like, well, because I'm saving lives, it's okay that I don't get paid because the benefit is that they're healthier now. Yes, that's true. But in order to stay in business and do more of that, you have to be profitable, which means you first have to accept that you deserve to be profitable. So anyways, that.
Yeah, there is a lot of mindset stuff that's all wrapped up in all this that, I'm sure you kind of come across a lot in so many different sort of forms. But yeah, and I think that often people tell themselves that it's okay and this is how it is and this is what I've seen and everyone else is in the same boat as well. But it's not the case. If you're able, if you're willing to invest a bit of time in reading a book like yours and looking at your numbers and understanding them, then truly what you focus on is what works. And if you focus on your numbers and you understand them and you're willing to go through that whole little bit of a challenge, a little bit of a tough kind of learning maybe, or maybe not, maybe just time. And you will see that it pays off in dividends, literally for you, right?
Literally, if you follow the system, you will get dividends.
Literally.
That's right.
Literally. Okay, so I have to ask you this before we hop off. So as a gym owner, what was the kind of biggest lesson, most challenging part of being in that role for without going into it?
That trust is earned, and you have to earn the team's trust before you are going to ask them to make big changes. Yeah.
There's so many different hats you wear as a studio.
And they literally, your team doesn't see everything that you see. They literally just see all the members and think you're rolling in cash. I'd encourage everyone to be a little bit more open with their team about the financial situation of your studio or gym. You'll be surprised. That was one of the best ways to earn trust, is just to be vulnerable with our team.
Interesting. Yes. And that is scary too.
Yeah, it is.
Yeah. Very interesting. Well, John, thank you ever so much for taking the time to join us here on the Pilates Business Podcast. I really appreciate it.
Yeah. Thank you so much for having me.
Absolutely. I'm going to link to all of the places in the show notes. And so you can get in touch with John and his team and grab the book and everything else. So I hope this was a really super helpful conversation. And I hope that it was helpful for you all to listen in and hear about this topic, which is such an important topic. So I will be back next week with some more great business building tips and insights. Have a fantastic week. Did you love this episode and want more? Head to spring3.com and check out my free resources that will help you run a profitable and fulfilling studio business. And before you go, one last reminder, there is no one way to do what you do, only your way. So whatever it is that you want to do, create, or offer, you've got this. Thanks again for joining me today and have a wonderful rest of your day.